Okay, guys, good morning, everyone, and welcome to this session on international practices in public procurement. So, when we talk of international practices, we are talking of the international organizations. The top international organizations like World Bank, African Development Bank, Asian Development Bank, and United Nations organizations. They are the top organization in terms of volume, in terms of size, in terms of coverage. So we want to see what are they doing around because they are also in the public procurement. It's a public money. So what type of practices they have around. So before we go into that, there are three components of this whole subject. One, because the trade is going up. Like last year's, we had the trade of $16 billion. I would say $15 billion was import and 16 billion was export around. So there was around that, not the trillion dollars, sorry. So $16 trillion was the export and $15 trillion was import. When we're doing so much of export and import, there has to be somebody to promote the export and import. There has to be somebody to set up the standards for them. There has to be somebody to promote this. So we have some body organization, international organizations. We'll try to give you a flavor of those international organizations like IMF, what they do, WTO, what they do around. And then later on, we'll walk into the real procurement processes. I'll go into the World Bank because World Bank has advanced a lot. And World Bank, African Development Bank, Asian Development Bank, Latin American Development Bank, they all follow the same guidelines. So I'll take World Bank as a process-wide. UN is also having, but not major difference. But I would say World Bank has recently changed in the last year. So they are much ahead of others. And the third section which we'll be covering around is the custom part. When the goods are coming in the country, we are importing the goods. What are the custom formalities around? The whole logistic issues around. So these are three sections and we'll try to cover up in the next 1 hour. And if you have any questions, I'll be happy to extend it. Now coming back to the subject. So the learning objective, as I said to you earlier, the role of international institutions to support international business. In the word we could call the trading, but the trade word is not the right terminology because I would call it the international business. So learning role of WTO, World Trade Organization, which is based in Geneva, and they have trade agreements such as GATT, TRIPS, GATT, and GPA. Now then we'll talk about the various international agencies like World Bank, African Development Bank, Asian Development Bank, and how they procure it. The reason of knowing their procurement processes, every country, whether it's my country, your country, every country, when it comes to public procurement, they look around how World Bank does it. They try to adopt the World Bank processes as role model. So if you are conversant with the World Bank processes, and particularly if you're taking the World Bank loans, World Bank funding, then you have to follow the World Bank guidelines. So understanding their process will help you to convince your government to change their procedures in line with World Bank. The World Bank has moved much ahead when we talked about the e-procurement. They have moved much ahead in that areas around. So I think following their guidelines, following their procedures is a one way to learn the latest state of art in the world public procurement. Because World Bank is also public procurement, like your government. Your government money is coming from the taxpayer. World Bank money is coming from the governments. So it's all public money. Knowing procurement processes around. So this is what we'll talk about. And then lastly, we'll touch on importing process, the custom clearance formalities, what type of documentations are required around. So this is broadly what we are going to cover. Let me first explain what is international business. When we say international business, or somebody may call it trade, but the trade could be international trade. I won't say trade, I will say business. So it refers to those business activities which are cross-border. If something is going from your country to another country, from one border to another border, it is not within the country, it is from one border to another border, whether we are giving goods, whether we are giving services, or we are giving resources, natural resources. I might be selling electricity, I might be selling coal, I might be selling oil, anything around between two or more nations. So international means it is between the two Our more nation, we call it international. So the term international business, our international trade, let's be very clear. And the figure I told you earlier also, last year the figure was $16 trillion was export and import was $50 trillion. And this year they're expecting around the growth around 2.4% or 2.5% this year's around. Now the transactions of economic resources. When we talk of resources, what are we doing? We talked about in the first paragraph goods, services and resources. So when we say resources, resources could be the money. Somebody might be bringing the money from abroad, investing in your country. That's a capital. Somebody might be coming from abroad and bringing the skills in your country. Or your skills might be those who are expert in your country, might be going abroad to provide the skills around. People for the purpose of international production of physical goods, or sometime for banking services around, insurance services, construction services. In your neighboring countries, they need some support of you. You send your experts around. That's also the resources. So there are goods, there are services and resources. So this whole business we can call as globalization. So when we say the word is globalizing, this is what we are talking around. That means the country to country, the dependence is becoming more and more. We can't say I'm isolated. I have a firewall. No. Each country is depending on others. So in short, we are becoming a community, global community. Each country needs others. I might have one resources, other might have other resources. I might have this skill, you may have this skill. We work together for the benefit of both. That's what we call globalization. Now the major support system for IB. The organizations which are helping this international business or globalization to grow. The very first one is IMF. IMF job is to ensure the stability of currency. I'm dealing with X country or Y country, and suddenly I find their currency has become either too strong or too poor. In both situations, I'll be loser. I will not like to do a business with a country where my currency is going so fast. If it is going down, maybe I'm a winner, but if it is becoming stronger, I'm a loser. So IMF, which is based in Washington, their aim is to ensure they look at each country currencies around, they try to ensure stability as well. There's another organization called World Trade Organizations, Rule of the Trade. Their job is World Trade Organization, to promote world trade. If they want to promote world trade, two countries are fighting together, there has to be some rule for that. So the rule of the trades are coming from WTO. World Bank, as the name indicates, is a bank, is a financial institutions. And if some country is short of some funds, the foreign funds, they provide you financial funding for projects like water projects, education projects, health sector projects, infrastructure projects. So you may have any projects and you can go to them and get the loans for that. There's another organization called UNCTAD, United Nations Conference on Trade and Development. They deal with trade and development issues among the member countries. Two member countries want to do the trading part. They want to help each other on development issues. So UNCTAD becomes a platform for promoting. So the broadly objectives is to expand and balance the growth of international trade. Everybody wants the more growth will happen, more jobs will be created, and expansion has to be there around. So, but the WTO job is to ensure that the trade goes smoothly. If there are any disputes, like one country might be giving a subsidy on grain, and that means the grain, the food items are cheaper there, and then other countries, they're very costlier, so people will like to export there. So they are trying to do, there may be disputes sometime between one country and other countries. They're trying to resolve. And the UNCTAD is all about trade, finance, technology. UNCTAD is based in Geneva. WTO is based in Geneva. IMF is based in Washington. Let's understand the WTOs. So WTO is a rule-based, member-driven organization. It has the members. Now its main function is to ensure the trade flows smoothly. Nigeria is also part of it, created in 95, 120 nations to supersede and extend the GATT. Initially it was GATT. In 47, 48 it came up around. So the GATT was the one, and then later on in 1995 the GATT name was changed to WTO, and now I would say 148 member nations are member of it, which covers around 90%, 97% of the world trade. So the world pop numbers may be, the number of countries may be 229 or 228, but 148 covers 97% of the world. There are observer countries which are participating as an observer. Now the GATT is the very first one, and their job was, as the name indicates, general agreements on tariff and trade. So the countries used to sit together with the GATT, which is again a UN body, sit together and try to make an agreement. Let's say your country makes with the neighboring countries. Nigeria and India, they make agreements. Guys, we will buy from you the oil. We'll sell you this. So they try to come up with the tariffs and the trade agreements. So these agreements, if tomorrow there's a dispute, there's a problem, they were trying to, GATT was helping. So the leadership of US, GATT was created in 47. This was after the World War II. So as a step towards international trade organization. But so originally there were 19 original contracting parties. WTO has now 148. So WTO came in 95, GATT came in 47. So GATT name has been changed to World Trade Organization, and the members are much more now. And what it regulates is goods only. It doesn't cover services. The pillars: non-discriminations, reciprocity. Two countries can have a reciprocity around, because I will say, okay, I have got enough of cotton, I'll provide you, and you have enough of oil, you provide us. We fix up the rate. We try to help each other. We could also have a most favored nation clause. If you may say, guys, I want to have a partnership with this country, they are my most favored nations clause. That means you're giving some concession. So that's what we're calling as the most favored nation. The current structure of WTO, the goods is one. So we call under the GATT agreement. This is why when I said to you, GATT was only dealing with goods. Now WTO deals with goods, services, intellectual property, and disputes. It's a wider horizon. So GATT is nothing but general agreements on tariff and trade. Additional detail, other goods agreements and access. Then GATT's, the way this other version, GATS, general agreements on trade and services. Intellectual properties, somebody has written down, done some research, developed some medicines, developed some drugs for cancers or AIDS program. They want to have intellectual properties. Lastly could be the dispute settlement. So you can imagine around the structure of WTO, they take care of the goods under the GATT, services under the GATS, intellectual property under the TRIPS. TRIPS means trade-related aspects of IP right, intellectual property rights. And dispute is a dispute settlement. So these are the four broad headings, and their office is very near the UN building in Geneva. Coming back to the GPA, this also agreement was developed by WTO. When one government is buying from another government, so they follow whose rules I'm going to follow, what procedures I'm going to follow. You might be supplying oil to the neighboring country or any country in the world. They may be supplying you something. What procurement procedures will follow? Will they follow of that country? Let's say you're doing with Kenya. Are you going to follow the Kenyan guidelines? Are you going to follow the Nigerian guidelines? Are you going to work with Ghana? Whose guidelines you're going to work on? They have developed, the WTO has developed the Government Procurement Agreement. Now this GPA basically covers all the things around how procurement will happen, what disputes will be handled, all those things are there. Settlement part, if somebody feels that my rights have been infringed, they have to bring the case to the WTO. They cannot do unilaterally. So that's what we're trying to say. Obviously, the first thing would be consultations. And if you feel consultation doesn't give any solutions, then we follow state-by-state procedures. Could be through arbitrations or other things. You could have independent experts, you could have arbitrations. So finally, the disputes will be handled through WTO. And even if the governments are not happy with the final thing, they can appeal for the final ruling. Now, coming back to the economic integration. So many countries, they're trying to form their own pact. Like in America, they have a NAFTA, like with Canada and Mexico's. So anything moving from those two countries can be free. Anybody can bring anything, can take out anything. So those are the free trade agreements around. They mean each country is independent. Canada is independent, US is independent, but then there's a free trade policies around. Custom unions, as you know, many countries, this guy is okay, we join together. Any items can come through customs. Same rates are everywhere. If it comes to my country, I'll charge you this percentage. If my goods comes to you, I'll charge you. So you have a custom union around. So it's a fixed trade, free trade. First thing, items can go through the customs. And then common external trade policy. The European countries have joined together as a custom unions. So any items from Denmark can go to Norway, Norway can go to Denmark, they can go to Germany. So that's a free trade agreements. And while internally they are independent, but within the European Union, they are a custom union. So common market, and the last is economic union. So in economic unions, common market, harmonization, monetary, fiscals, all are combined together. That means all 29, 30 countries in Europe, they form economic unions. So that's the advantage around. So that means if anybody wants to export to Europe, they have to go through the common standard of the Europe. It is not X country or Y country, even visa also. So you can imagine around it's a common market. Now the organizations which are there, so far I explained you the section 1, which talks about organizations which are trying to promote international business, international trade, what you may call around. So those are the ones which are managing the set rules. Guys, this is how the trade can go up and down. Now we talk about international organizations. Now these are the development organizations. Now these development organizations are owned and financed by the member governments. Each organization has got member governments around. UNDP has got its own, UN has got its own, UNICEF has got their own, WHO has got their own, World Bank has got their own. So the member country decides what will be the process around. Most multilateral organizations are part of the UN system. The primary goal of these is to address humanitarian areas. Suddenly we find there's an earthquake. It's a UN, World Bank, they all will jump in and try to support. Some countries left behind on infrastructure, they will try to support you. Some countries like on poverty reduction, which is one of the big issues in the world today. So how do we help the poor people? How do we improve the poverty line up, bring the poverty line up? Governance, good governance is very important. Education. Now this is the way when countries are asking for the loans, obviously you have to define the project. Let's say my country wants big flyovers, they want to make a hydel system, but they don't have the exchange money around. The guy says, okay, let's make a project. After the project approvals, loan negotiations are done with the bank. So bank is willing to give you a loan for 30 years, 25 years, whatever you're looking for at a very low interest rate. For those countries which are medium level, those whose salaries are per capita is higher, their rates are much higher. But those which are below, per capita income is less than $1,000, so the rates are low. So loan appraisal happens, project supervisions, implementation. This is how the cycle goes of the loans. Now, identification is the very first part. Public sector procurement procedures, rules, what are going to be followed. Private construction, manufacturing industries, NGOs, community participation, and borrower's capacity. The guy is asking for $3 billion loan, but do they have sufficient capacity to pay back? If they're putting a money into a deep well, the money will never come back. But if they're putting in a project which will create economy boost, then the funds will come back. That's how they look at it. Project preparations. So in the project preparation, certainly we are looking at procurement arrangements, selection of procurement methods, cost estimates and packaging, procurement planning. The planning is a key thing, which I know many of the government procurement, the procurement planning is missing. In the UN also it came up around at my time when I was there, 2008-9 it came up. So planning was made as a mandatory. And particularly when you go to the e-procurements, procurement planning becomes a must. So that is what I think is one, I would say, takeaway for all of you, that you have to start implementing procurement planning if you want to cut short the cycle time. The next comes the bidding documents. Now the bidding document has to be in line with manual. So workshop, training, this is what they do. Now come the bankroll. You have made documents, you are asking for a loan. Now the bankroll would be the lend for specific project, assist the borrower, provide information on projects, sign the loan agreements, review the compliance agreements, verify the withdrawal applications, and address complaints. Now the borrower's role would be, obviously they have to make a procurement plan. Any one of you who's getting a World Bank funding, they will expect you to make a procurement plan along with the dates, along with the delivery plans, when this will happen, when the road will come, when the raw material will come, when the completion will happen. All those PERT and CPM charts has to be made. Prepare the bidding document, issue the bidding document, giving the ones, and then awarding the contracts and implementing. Award is one thing, but implementing is the most tougher jobs around. You're given a contract to a guy, but the guy has become too slow. The guy has got into the office, got the business, but has not been able to implement. So the bank review process is very, very important around. Any loan, any funding coming from the bank, whether African Development Bank, the World Bank, procurement plans, they will look at it. They'll look at your capacity, whether your people have the capacity, the knowledge to do this. Advertising, procedures, pre-qualification document, then the bidding documents, bid evaluations, contract, and lastly would be the contract amendments. And they also do the procurement supervision to ensure compliance. But this is all pre-review, but then there's a post-review also. Post-review means after the job has been done. So the responsibility, I think I've explained, so this is done. Steps in the procurement cycles. Obviously the game starts from requirements. Somebody has to sell, I need this thing. I need 10,000 laptops. I need 20,000 printers. I need to make 2 kilometers of highway. That's the requirement part. Then for that, you have to make a budget. You have to get the funding approvals. You have to schedule it, when this will happen, activity by activity. Even to make a road, there may be 20 activities around. When it is going to happen, each activity. Then comes the procurement requisition. Somebody has to make a requisition, select the procurement type, and pre-qualifications. Next one is develop bid documents, and then the management of this whole process around. Now, procurement law does not govern the relationship between the buyers and sellers. At the end of the day, you may have your procurement law. Companies will say, guys, okay, everything is governed by us. I think what is important to know is the contract, applicable law, and the business practices. This is why when you get the World Bank funding, it is not that this is going to be your law, this law, what type of contract it is, what is applicable law, and the business practice. If the business practices, if the World Bank spells it out, you have to follow those things. Now the skill, practices, and the law. In contract for purchase and sales of the good, the law requires basic four. The price is one, quantity is second, description is another, last is not the least is specification, quality. All else is a matter of choice. Business skills and practice define this around. This is what I would say. So same thing, but explained in a different, more detailed way. When it comes to specifications and quality, contract language, specifications, how do we file it? Should it be performance-based specification? Should it be technical specifications? Should I take the specification of a supplier, cut and paste? How do I take care of the quality part? They have to be built into the specs. Let's say I'm buying the health items now. Health items, you're going to talk about pharmacopoeia reference, the strength of the medicine, the dosage size, the formulations. We cannot copy from one country to another country. Some place the people are very tall, very well built. The dosage size may be different. But in other countries, the people may be short and much smaller in size. The doses of the medicine for the same medicine from the same problem will be different. So one has to develop the technical specs. All of the specs, when I look at this one, shipping requirements, what Incoterms I'm going to use, the labeling requirements, storage conditions, dating on arrival must have specified amount of time, performance dates, everything has to be spelled in that. If I look at the core principle of World Bank, and which are true for all the banks, I'm sure same are true for your government also. First thing is the process has to be fair. It should give the value for money. It should be economic process. I mean, you're getting economy out of it. It's not that it's costing you double or triple. It should cut down the cost. Integrity. The process has been very done ethically, fit for use. The items which are coming, they're useful. They are not obsolete items. They are not items which have been expired. The dates have expired. Particularly the food items and the medical items. If the date is not expired, it's not used. And the last is transparency. That means everybody knows who are the people competing it. Everything is online. Nobody can see the bidding documents before the due date. Everything is being posted online. Next comes the fairness. Obviously, the process has to be fair. Fair does not mean that we are not giving a favor to one. Everybody gets same level field. It's not that the one guy gets all the information, but the others don't get that information. It's not a fair game. Now, when it comes to procurement regulations, the World Bank has changed from July 2016. I was involved in one of the review group. But regulation replaced, in the good old days, we used to have Red Book and the Green Guideline. They have been replaced by this. I think it's a major improvements in the World Bank guidelines. It enhances the procurement procedures, enhances the bidding documents, and expert use framework. They are basically promoting the use of framework agreements, the long-term agreements. Instead of you getting a request and then running around trying to find the suppliers, you waste more time. Here you have made a long-term arrangements based on the spend analysis. And that's what I would say, it strengthens the contract management. The list of standards which have been developed by them for the goods. I'm sure you all know one envelope system, two envelope system. That means the offers are coming either in one envelope, everything is there. The technical parts are there, price is there. Two envelopes mean one envelope is for price, one envelope for good, technical. So like this, you can find many changes around. Some place you find the word PQ, pre-qualified, some place without qualifications. So for the goods, you're getting a turnkey plants, you're getting a works, In the good old days, we used to call them request for bidding, used to be called ICB, International Competitive Bid. Today we call RFB. Everything starts with R. RFB, RFP, RFQ, that's what we do. Now the documents which we have for consultancy, we call them RFP, Request for Proposal, where you're looking for a solution. If you're looking for a solution, then certainly it's a different terminology. See, in the past we were calling standard bidding documents SBD. Now we're calling standard procurement documents. Now these documents are only applying to those projects which have been signed from July onward. From July 2016, which have been signed, they apply to them. If they're not, if it's old documents, then naturally old procedures apply to them. So the approach is the 5 headings: identify, clarify, supplier wants a clarification, supplier wants justification, and then we verify them and decide who should get the contract. This is the beautiful thing which I think World Bank has come up around. In the past, it was all about lowest price, lowest price, lowest price, 3 quotation, lowest price. But this concept is very good. You can look around items which are of easy items, less commercial issues around, complexity is less, I can use request for bidding. But the items become more complex. I go with request for proposal. Streamlines, then 2-stage around. So 2-stage means I do first technical evaluation. 100 people have come down. I do the technical evaluation. Out of 100, I select 10. Then those 10 people, I ask them, guys, give me the now financial proposal. And the last one is competitive dialogue, which in many governments is unheard. You know very well it's a very risky project. There's only 1 or 2 suppliers. Why do you want to waste time in going into getting this? A competitive dialogue, you can even get straight to the dialogue. You can straight get into the negotiation. So that's the philosophy. So I'm sure it's a wonderful tool. And this has been basically implemented in European Bank for Reconstruction, EBRD, and they're done very successfully. So World Bank has basically taken their model to build this. Now when we come to RFP, as you know, request for proposal, we are looking for solutions. RFP can also be done for goods. You can also do for works and non-consulting services. Not the consulting services, non-consulting services. Somebody comes and repairs your computer. Somebody comes and repairs your photocopier. They're all non-consulting services. The first thing is initial selection, the shortlisting. Then you do the optimized use of rated evaluation criteria, promotes functional and performance-based specifications. That's what we do, initial selection. So it gives you the rationale, why should we do the shortlist. Now this initial selection is different than pre-qualification. In a pre-qualification, I'm really looking around whether these guys can work with us. This is more like a desk type work. I sit on a desk, look at the past documents, look at the profile, and then I make my initial selection. So pre-qualification, as you can see, selects all substantially qualified application. Initial selection selects only the best qualified application. That's what it differs. Obviously the plan. When we talk of a procurement plan, it must give the description of the activities, must provide the selection methods. Are we using RFI, RFQ, RFP, RFP? Cost estimates, how much you expect around? When do you want this job to be complete, time schedule? If you're giving a PERT and CPM chart, a Gantt chart with the timing on the one side, I think this serves the purpose. Selecting methods, I think as I told to you, you can have for goods, works and non-consulting services, you can use request for bids, you can use request for proposal, you can also use request for quotations and direct contracting. There's only one supplier. There's a framework agreement. You say, guys, this is the best one. You go with the direct contract. The market approach, I could have limited open competitions. I could have limited suppliers. I don't go to everybody. I could go directly to someone. I could have within the country national. I could go globally. I could go to the pre-qualified ones, initial selection, single stage, multi-stage. Everything is feasible around. So you have to see around methods are same, RFP, RFI, but the market approach is this. And the selection approach would be the competitive dialogues, triple P, with private partnership, and e-reverse auction. Coming to the selection methods for services. So when we are selecting the services, we go with quality cost-based selection, the fixed budget-based selections. Somebody has given me the fixed budget, guys, go and do. Here is the budget. Don't come to me later. Everything should be done within this budget. So there's a benchmark, and I work on that basis. The next come the least cost-based selections, then the quality-based selections, the direct selections. That's what you need. And the market in this case of services again can be international, mean global, national, open, limited, and direct. Negotiations is a very important tool. So this calls for negotiating the gaps, negotiating the differences between the two players, supplier and the buyer. There's a gap in their thinking in terms of price, in terms of delivery. So you could negotiate and come to the best deal now. Now coming back to the guidelines, one is that you can reject all the bids whenever you get. Justification required when you're rejecting. Keep in mind, you're dealing in the public environments. Any rejection means if the supplier has a full right to come and ask to you, why my offer was rejected. Then there comes if cost substantially higher than estimate. My budget is this much. My cost per deal is this much. If this is coming very high, I like to resolve that money part. Can I get extra funds? Once it is resolved, then I go down to bidding part. Lack of competition. If all bids non-responsive, you can imagine around this section. So people have come up, guys, okay, if this does not meet, I can reject it now. Negotiation is again alternative to rebidding. One could be negotiation, I do the reverse auction, that is also negotiation, e-negotiation. And I could do, instead of rebidding, I could do alternative. Next is the misprocurement. Keep in mind, World Bank funding is based on ensuring that the project procurement has been done as per the guidelines. If both match, great. If it doesn't match, the contracts, what we are looking around, if they find the World Bank find the process is not in line with the World Bank procedures, they could call as a misprocurement and not funded. So that's what you have to keep in mind. Importing of the goods. So this is the last section on the goods part, importing part. An import contract has conditions on the local contracts. However, following conditions need to be drafted. So whatever you're doing importing part, please look at it, whether you have a packaging clause, whether you have insurance arrangements, whether you have a shipping arrangement, whether you have inspection clause, Incoterms, payments, and the last two is documents for import clearance and dispute. So keep in mind these documentation are must, very must. This is the way I think shows you the letter of credit. When the money moves from one company to another company, particularly when you're dealing with abroad, some companies don't have faith in you. They say, guys, we want to do business, but everything has to be based on LC. LC could be confirmed. LC could be irrevocable. it becomes much more stronger. So here we got applicants and the beneficiary. So you are stating a contract and then the shipment is coming this way. But behind them there are two banks. One is a bank of basically the one who is supplier, and this is the bank of the one who is buying it. So you can see around there's the issuing bank and this bank. So whenever, as per the guidelines, shipping documents are delivered to the beneficiary and the goods are delivered to the applicants, what happens is the beneficiary passes on to his own bank, money has been earmarked and they get the funds. Even if this company has become, the applicant becomes bankrupt, they'll get their funds. Registration of the importers in India. In general, I would say it's very easy to import, but I think it's a good practice to get yourself registered with IEC code, International Export Code around company. So they have a code, they give it to you. And application fee for this. I think every importer should get the code number for that particular category. Now, documents to be studied by importers, what they look at it use invoice, packing list, bill of lading, GATT declarations, letter of credit, certificate of origins, and import license. Now the shipping documents, one is commercial invoice, second is packing list. Now the shipping invoice, which is the commercial invoice, is prepared by the sellers to inform the buyer how much he knows for the goods and services being supplied. So I'm based at the seller, you are placing an order to me, I'm abroad, I'm sending the goods to you, I have to send you the copy of the commercial invoice. Same thing is true for the packing list also. The bill of lading is used for the shipments. It is a certificate of ownership. So till I have the certificate of ownership, it's very difficult to prove that I'm the owner of it. So bill of lading becomes my ownership. So there is a contract, it could be formal, and the clean bill of lading. Clean means my box is having no mark at all. It's totally untouched, no damage at all. Okay, import process, issue the letter of credit if the customers does not have the IEC number. If you don't have, these are the don'ts, I'm not talking the do's part, the do's part I've explained to you, but the import process, the don'ts are these. So keep in mind these practical tips. Allow advance payments without proper documentation. Don't do this. Somebody may ask you, give me the advance payment, but ask for documentation. Open LC without proper transfer document, again avoid it. So this is the way I try to put down some of the practical tips for you if you're trying to import. Keep in mind this. But many times, since you are dealing with the government bodies don't open LCs. They say, guy, we are not a small scale company, or not a medium scale company, we are a government. And government has a credibility. So government normally tries to avoid the LC part. Like in the UN, I will never open LC. I'll say, guy, you need to have faith in us. If we are buying from you, we'll certainly ensure the payments. Well, friend, with this, I want to thank you for the patient hearing.